Hello, here are my counts for Bitcoin. So the first scenario is counting this as an ABC, W, X, and then ABC for a wave Y, creating a double zigzag like this, and then you move up. So here, the bears do not want to take out this high, that's invalidation for a zigzag. Because if you do, it's a low probability to have a deep move down. Then it's a higher probability for a wave B, an expanded flat. But the bulls then, it is a bit concerning because this move needs to be counted as an ABC. So here you need to have wave A, and this needs to be your wave C. And you can see the proportions. Wave C is very small compared to wave A, which is not typically what you want to see in a three-wave like this. Generally, wave A and wave C is pretty much the same size. So proportions are very important in Elliott waves. So that lowers the probability for this scenario altogether. But nonetheless, if we move up here and take out this invalidation, then it is important to not take out this expanded flat wave B invalidation at 67,382.17. Because if we move up and take out this scenario is no longer on my radar, so to speak. It's very, very low probability for a wave B and expanded flat to reach this level. But after that, as I mentioned, this is looking for more upside, taking out this high. So the other way to count this is having a bigger wave X. So here is the same ABC in a W, but this three wave A, three wave B, and then you have a wave C for a wave X here. So ABC like this. So the issue here is that wave C is very difficult. It's very difficult to count a clean impulse here. So we need to basically have one more high at least to fit a good looking impulse here. You can kind of force count it, but it's not pretty at all. So, but nonetheless, it is valid. And if we keep below this line, then it's a higher probability to have a deep move down in a wave Y for this double zigzag like this. But if we move up above this line at 65,609.72, it's a higher probability that wave Y is either a flat or a triangle like this, and then you move up. So that is what the bulls are looking for. The bears want to have this final last stretch down and then take their positions out and you move up. So the only pure bearish scenario that we have right now is counting this as a leading expanding diagonal. So 1, 2, 3, 4, 5 in a wave 1 or A, and then you have wave 2, and then you move down. So here you don't want to take out this if you are a bear at low probability wave 2 at 66,373.46, because if you do, it's a low probability for this to be a wave 2, and thus then this is a low probability for being a wave 1, since this is a low probability wave 2, so they are connected. So that's not what the bears want to see. It's very common after a diagonal to have a deep retracement, but not as deep to hit this line. And the invalidation for this scenario is taking out this high. But a leading expanding diagonal like this is one of the most uncommon structures in Elliott waves. So it's a higher probability that all of this is corrective structure than it is a leading expanding diagonal. So that is just something by statistics to keep in mind. So therefore you kind of need to fit all of these together. So if you take this line, low probability wave 2, if you are a bull, you want to hit this. And if you then back up, if you are a bull, you want to take out this line as well, lowering the probability for a move down as well. And then you back up once more, and you want to take out this expanded flat wave B invalidation as well if you are a bull. So that is basically what the bulls are looking for in a nutshell. If you found this analysis helpful, feel free to subscribe. And you can also find Elliott Wave resources at mellantrading.com. I'll see you in the next one.